TFNN. Headline News Update. Here's Tom O'Brien.
Hi, everyone. Basil Chapman sitting in for Tom O'Brien. This is the 10 a.m. update brought to you by Everbank. And what's really important about today is over the last 24 hours, China clamped down on selling key stocks. That's all you need is some government push to be able to stem the selling. It's kind of what happened. Had huge moves on the upside. Our market has followed. This is going to be really important as a 2 to 3 day session. I'll explain why. The low that was made yesterday was higher than the previous day. And the previous day, that was Tuesday, Tuesday, the low in the Dow was 17,465. For me, it was under the key 17,500 level. If there are closes below that 17,500 level, 2 out of 3 sessions, I would even say perhaps 2 out of 4 sessions, that would start to indicate that the weekly chart of the Dow is starting to break key support. It is starting to deteriorate. The technicals are very poor. The price is held, but it'll stop holding if that 17,500 cushion is pierced. Now, this is going to be very important. Dow is up 206 at 17,722. It is sitting right at the resistance of the 9-period exponential moving average. Went fractionally higher than yesterday, but it needs to hold. So what we want to see, if you want to see a good rebound, at least a rebound that I would consider shorting, but a rebound nevertheless, that should last with the volatility index, which right now is at, I think it's at 70, what is that? Yep, it's at 1787. It's come down quite a bit. You want to see that volatility index fall into the 16s as the Dow climbs into the 17,800s. That would be very important over the coming 2 days. The S&P, SPX, because any failure of this rally to go only to a plus 50 by the end of the day would be very negative action. The S&P made a low 3 days ago of 2,044. It has stopped right at the 2074 9-period exponential moving average. If you want to see a good bounce, you want that bounce to get somewhere to the 2082, maybe even touch 2100 over the next 2 days. We'll see. But 2092 is the 9-period exponential moving average in the weekly chart of the S&P. And so far, the technicals are really poor. We'll talk in my show, which comes up later today, we'll talk a little bit more about the monthly charts. So let's continue with the numbers. QQQ series, up $1.25 at 107.34 as 107.72 resistance. IWM, the IWM is trading right now at 123.26, up $1.27. Way up at 124.20 is the resistance. All of this is just a bounce as far as I can tell. Now let's go to gold. Gold right now is trading at 1164. Intraday it hit the 9-period exponential moving average of 1167. What's really important about gold, if you want to see gold rally sharply, it needs to clear 1174 to kind of open up the upper side of the range, because right now it's just stuck in the trading range. If at any point in the next 2 days it breaks under 1150, that's very negative action. Look at the dollar. The dollar at this particular point is trading at 96.37. It's holding the 9-period average support of 96.09. If the dollar breaks under 95.75, you're going to see gold move higher. You're going to see the dollar move lower, with the euro having a bounce. And the euro right now, there's the EUR USD currency pair. Let me just get to it. The USD currency pair at 1.106 couldn't hold the 9-period moving average of 1.109. We'll see if it's able to do that by the end of the day or by tomorrow. But in the meantime, it just looks like it's stuck in a trading range. So this is the 10 a.m. update brought to you by Everbank. And for more information on the products that they offer, please visit the everbank.com/TFNN site. It'll give you a tremendous amount of information. I do appreciate you being here. And as I say, Basil Chapman sitting in for Tom O'Brien. And see you tomorrow.
Everbank's innovative market-safe CD can help you diversify while protecting your principal deposit. In fact, Everbank unveiled a new 5-year market-safe power metal CD, which combines the power of gold, silver, and copper. Metal prices are currently low, so this CD could really deliver. Consider the facts. You get exposure to 3 valuable metals in one index CD and have the potential to earn up to 45% capped upside payment at maturity if the metals increase in value across annual pricing dates. And should they decrease? No worries. There's zero risk to your principal here, as you still get 100% of it back. Keep in mind, returns are based on CD performance. No annual percentage yield or periodic rate of interest is paid on the CD. Intrigued yet? The July 9th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is a member FDIC.